Have you noticed how everything wants to be a subscription now? It used to be just Netflix and your phone bill. Now it's a software, it's games, security cameras, fitness app, cloud storage, even your car features. Most of them live around the magic number, the $9.99. It feels harmless, but here's the trick. Companies are betting you won't do the math. They know once you say yes, those charges hit your card every single month. And most people never cancel. In 2026, a lot of those small subscriptions are set to jump in price. So today, I want to show you how this subscription economy really drains your wallet and how much the average person is actually paying. And the 3 moves you can make now to take back control before prices climb back again. So let me show you how this subscription trap actually works. Because it's not an accident. Companies build it on purpose. Everything starts with something small, a free trial, a low monthly rate, or a limited time upgrade. They make it easy to sign up, but almost impossible to keep track of. And once they have your card on file, the real game begins. Most subscriptions stay in the $5 to $15 range for a reason. It feels harmless. It doesn't trigger the same reaction you get from a bigger bill. But when you stack 8, 12, 18 of this at the same time, it becomes a real drain without you ever feeling the single big moment. And the truth is, companies know the average person doesn't check their statement closely. They know people get busy. They know once the charge hits the card every month, most people won't cancel. That's why the subscription model has become one of the most profitable business strategies in the entire economy. And heading in 2026, this model is about to get even more aggressive. Here's why 2026 is going to hit harder than what we used to. A lot of companies are struggling with higher costs right now. Cloud storage, data centers, payment processing fees, labor, even the AI tools they run in the background. So instead of raising the price of their product once, they're shifting everything into monthly charges. It gives them steady income, and it makes their financial report look even healthier. Streaming platforms are already testing new prices tiers. Mobile carriers are adding service fees. Tech companies are pushing paid versions of apps that used to be free. And the auto industry is quietly testing subscription features inside the car. Heated seats, remote starts, even the safety tools. This isn't slowing down. In 2026, companies expect consumer spending to get tighter. And when that happens, they don't lower prices. They find new ways to bill you. So those $9.99 and $14.99 subscriptions, they're going to creep into $17.99 and $19.99 ranges. Some platforms will add new premium tiers. Others will bump the base price quietly. And many will introduce add-ons that look optional, but really, they're not. Most people think they are paying for maybe 4 or 5 subscriptions. But when you really sit down and list everything out, the number is usually much higher. So let me give you a quick sample of how fast this adds up. You got the big ones, the Netflix, the Hulu, the Amazon, the YouTube premiums. Then there are the small ones, the cloud storage, the music, fitness app, photo editors, password managers, shopping memberships, even those apps that charge you just to remove those ads. And a lot of people forget about the stuff tied to your phone. Extra iCloud space, mobile security apps, location services, or the old trials that never got canceled. When you put all together, the average household is paying well over $100 every month. Sometimes closer than $200. And most of it doesn't even feel like spending. It just quietly leaves your account. That's the dangerous part of a subscription. It's not one big bill you can point to and say, that's too expensive. It's 20 small ones that slide under the radar. And as they rise in 2026, a lot of families won't notice until they are already in budget trouble. So here's something most people never see. Companies actually prefer you on a monthly plan instead of buying something one time. Why? Because subscriptions guarantee them money every month, every year, whether you use that product or not. It's predictable. It keeps shareholders happy. It smooths out their earnings. And it lets them raise revenue without actually improving anything. So look at what's happening behind the scenes. Software companies are forcing upgrades into monthly plans even if you like the old version you pay for. Streaming platforms are spacing out content to keep you subscribed longer. Retail membership now includes exclusive access that makes you feel like you need it to get a good price. And even gyms and lifestyle apps design their features so you stay paying even when you're not using them. It's all built around one idea. A subscription customer is more profitable than a one-time customer. And once companies realize you accept a small monthly charge, they don't ask themselves if they can raise prices. They ask how much they can raise them without you noticing. The first step is simple. Make a list. Go through the bank app and write down every subscription you're paying for. Most people are shocked when they see all of them in one place. Second, separate them into 3 groups. The ones that you need, the ones that you barely use, and the ones you forgot you even had it. The middle group is where most of the savings are. And the third, look for annual billing discounts. Some services offer 20-30% off if you pay for the year upfront. That only makes sense if you actually use it. And the last, set a reminder. If you sign up for a free trial or a short promo, put a notification in your phone for that day before it renews. The big idea here is this. You shouldn't wait until 2026 to get control of this. Because once the increase starts, it's going to be much harder to cut things down. When people think about rising costs, they usually point to rent, groceries, gas, insurance, the big stuff that hits all at once. But sometimes the things that hurt your wallet the most are the quiet ones sitting in the background, the charges you don't think about, the ones that shows up month after month. That's why this subscription trap is such a problem. It doesn't feel dangerous until it is. And 2026 is shaping up to be one of the years where a lot of these companies are pushing a little harder, raise prices a little higher, and rely on people not paying attention. You don't need to cancel everything. You just need to be aware. Because once you know what's really going on, you're not caught off guard when those little monthly bills start stacking up. And if you're already feeling the weight of your expenses this year, getting ahead of this now can make a bigger difference than most people realize. So just take a few minutes to check your list. Your wallet will thank you for later. Thank you for watching.